When Paul Barlow from South London opened his latest home insurance renewal quote from Direct Line, he was staggered by the increase in the premium. The year before, the insurer had charged just £189 for his property, a ground floor, tubed flat he rents out in Bermondsey, near Tower Bridge. But this year it wanted £1,025, an increase of 442%. When he rang, thinking it must be some sort of mistake, the representative said he was lucky because if he had been a new customer the insurer would have turned him down entirely. Barlow's home is not in some hellhole location where burglary is rife. He has not been making large claims for subsidence or other matters that usually make insurers hike premiums. What Barlow has fallen victim to is a new flood mapping tool used by Direct Line called geospatial analysis, which attempts to assess flood risk with pinpoint accuracy and could see huge premium increases for thousands of other homes, not just in the capital but all over the UK. I spoke to a number of Direct Line staff who told me that my area, Bermondsey, is deemed high risk for flooding now, and if we had come to them for new insurance we would have been refused. Given there are huge swathes of London in the same boat, they are effectively declaring much of the highest cost Thameside properties uninsurable, says Barlow, 54, a partnership manager for a small school academy chain. He adds that Direct Line could easily have helped itself to the giant hike in premiums, as he had opted for automatic renewals. Given that renewal is automatic and I could have missed the email, it would have been easy for me just to let it go and be stung for £1,025. When Guardian Money put Barlow's case to Direct Line, it confirmed it is using a new geospatial analysis system when setting premiums, though it adds that it may mean some people's bills will fall rather than rise. A spokesman says we recently updated our assessments to include geospatial analysis of risk, which has meant that in some cases renewing customers may have seen an increase or decrease in the premium quoted. The software we use to determine the risk is updated regularly to help ensure we are able to provide the appropriate level of cover at the correct price. With this in mind, the risk and therefore the premium can fluctuate due to reoccurring weather events or climates which are likely to change. But how accurate is the modelling? Barlow is no stranger to flood risk, having been brought up in a part of East London that was prone to flooding before the building of the Thames Barrier. The woman I spoke to at Direct Line was very patient and led me through their new risk software. After putting the phone down I realised the scale of what they were saying. The London flood risk map is pretty much etched into my mind, having grown up in one of the lowest parts of the East End, receiving regular information and hearing the flood warning sirens being tested all well before the flood barrier. The Thames Barrier is one of the most advanced in the world, £2 billion worth, and now a major insurance company is saying that isn't good enough, and huge swathes of what is some of the most expensive real estate in the country is so at risk that the insurance costs need to be hiked by 5 times. The barrier is one of the most advanced in the world and now an insurance company is saying that isn't good enough. Paul Barlow says the flood barrier proved its worth in 2007 and prevented flooding from storm surges, such as the one in 1953 that inundated low-lying areas along the Thames such as Rotherhithe near Bermondsey. It seems totally bizarre that Direct Line don't seem to be taking the prevention measures into account when assessing risk. The only difference since 1984, when the barrier opened, is that properties are worth so much more, so perhaps they see an opportunity here, too. Direct Line is a customer of Ezra UK, which describes itself as pioneering the world's most powerful mapping and analytics software. Its website lists both Direct Line and RSA among its customers. Below a picture of a flooded landscape it says that it is making risk more profitable for the UK's biggest home and motor insurer, and that the UK floods of 2007 were the main catalyst for a project it handled for the Direct Line subsidiary NIG. Money asked the London Mayor's office if the flood risk for homeowners in places such as Bermondsey really is as high as Direct Line appears to be suggesting. It pointed us towards Environment Agency maps which suggest that Barlow's home is within the tidal floodplain, but the risk of flooding is low, estimated at between a 0.1% and 1% chance per year and between once in a 100 and once in a 1,000 years. The area contains hundreds of thousands of properties which are protected to a very high standard by the barrier and associated tidal flood defence walls, embankments and other gates and barriers. For Barlow at least there is a happy ending. He shopped around for a new insurer and found one willing to give him cover for a premium of just £167. Presumably it is not using the same sort of maps as Direct Line, or doesn't agree with its risk analysis. I find it both mind-boggling and worrying that this might be the direction of travel for insurers in London, despite one of the most expensive flood prevention systems in the world, he says.